from my viewpoint, when you ask the question, when will the bull market begin? I would say 3 years ago. I would say that we're in a hiatus in the bull market. And a hiatus in the bull market is very, very consistent with past experiences.
If you're enjoying this interview with Rick Rule and I, please consider subscribing to our YouTube channel, sharing this video, and giving us a thumbs up to let the algos know you want more content like this. And if you want to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Rick, are we about to see a commodities bull market happen soon? And what would you hazard a guess to be the trigger for this rush into commodities?
Well, I would suggest that when you ask when the commodities bull market is going to occur, that you fix the starting date at 2019, which is to say, I would suggest that we're already 3 years into it. I remember in the middle part of the last decade, the copper price at $1.50. I remember the oil price for a while being sub-zero. I remember the gold price at $1,000 an ounce. So from my viewpoint, when you ask the question, when will the bull market begin? I would say 3 years ago. I would say that we're in a hiatus in the bull market. And a hiatus in the bull market is very, very consistent with past experiences. Most investors perhaps are young enough or don't have good enough memories to recall earlier natural resources bull markets, but they have surprising duration. The first one, in my experience, began in 1970 and ended, by my count, in 1981, which is to say an 11-year bull market. Note that we're 3 years into this one. The second one in my career began arguably in 2000 and ended in 2011. Coincidentally, another 11-year bull market. So when people say, on the one hand, when will we enter the bull market? I would say 3 years ago. When people ask me how long it can go, I would suggest a decade. The other thing that people forget about these bull markets is the dimension, not the duration. My first bull market saw the oil price begin in 1970 at about $3 a barrel and end in 1981 at about $30 a barrel. Saw the gold price go from $35 to $850 an ounce. The same sort of thing, albeit to a tamer degree, happened in the 2000 to 2011 bull market. The copper price went from below $1 a pound to almost $4 a pound. The gold price went from $256 to $1,900. The oil price went from $12, $13, $14 a barrel to $120 a barrel. So people underestimate both the duration and the dimension of bull markets. What surprises them negatively is the volatility in those bull markets, which is to say 20 or 25% or 30% declines in a cyclical bull market, while unnerving, are commonplace. And you can have a hiatus in those bull markets, much like we experienced in 1975, or like we experienced again in 2002 and 2008. And these periods, I would call them hiatus periods, can last 18 to 24 months and can feature commodity price declines of 25 or 30%, and equity price declines, if you go back to the 1975 market, of 50%. So somebody who is casting some part of their future in a commodities bull market needs to understand it isn't going to be straight up. It isn't going to be stair steps to heaven. There's going to be lots of volatility. But they also need to understand that in terms of its dimension and duration, if you are careful but optimistic, there is a tremendous amount of money to be made in bull markets. And I would suggest that this one has a long, long way to go, although it might go lower first, although after the rebound in this market, there may be another subsequent decline.
Rick, the dollar's at 104, 105 on the DXY. Do you think that is causing somewhat of a headwind or a little bit of the hiatus for commodities?
I absolutely do. The US dollar, for all its sins, is the world's reserve currency. And the US dollar continues strong. The ability that the Fed has had to allow nominal interest rates to rise when other societies haven't been able to do this has strengthened the US dollar. My good friend Doug Casey describes the US dollar as the prettiest mare at the slaughterhouse, suggesting that rather than being strong, it's relatively strong against other currencies, other floating abstractions that are even more wounded than the US dollar. I would expect that the strength in the US dollar might continue for another 6 months, provided that the Fed can continue to increase nominal interest rates while other societies don't have the ability to do that. Um, it is odd that you see a period that has the strength that we've seen in the US dollar that is accompanied by relatively strong gold prices simultaneously. Generally, when the dollar does well, gold does very poorly. And to see the dollar hold its own in dollar terms means that gold is in a raging bull market if you denominate it in Turkish lira, in Japanese yen, in Chinese renminbi, in the pound, in the euro. And I think it's important to note that.
Regarding the rate hikes, the Fed pushing rate hikes, will this quote or unquote, and you kind of touched on this, fix things or bring on that day of reckoning? I mean, higher interest rates against a mountain of debt to be serviced is never really a good mix.
That's the $64 trillion question, Patrick. A bit above my pay grade. I personally believe that there is too much debt in society, and there's too much reliance on debt, both in the economy and in the political equation, for the Fed to continue for too much longer. Could it go on for a year? Absolutely. And I certainly hope that they are able to continue to let the interest rate rise, because taking the steam out of the economy gradually, I think, is a very good thing. The Fed desperately needs the ability to achieve their political ends, to lower interest rates at some point in time in the future. It's tough to lower them below zero. So the idea, as an example, that they've been able to increase the yield on the US 10-year from 1.2 to 3.2 is a very good thing. It would be very useful for them if they could get it to 5. If they got it to 5 and they subsequently needed to bring it down from 5 to 2.5 to inject liquidity in the system, that would give them the tools to do it. It doesn't solve their problem, or rather, it doesn't solve our problem, which is to say, it doesn't put the economy on a good footing, but it does solve their political problem.